The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
About whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials up 12, NASDAQ up 24, S&P's up 3.5, gold contract up $15, trading at up $17, trading at $1,294 an ounce. Silver up 25 cents at $18. Platinum up $17.90, trading out at $12.83. Copper down 2.5 pennies at $2.59 a pound. Light sweet crude getting smoked down $2.30 at $46.39 a barrel. Bonds, you get the ever-ready bond market, folks, refuses to give it up. The 10-year is flat at 129.28. 30 years up 13 ticks at 149.30. King dollar up 440 ticks at 93.33. The euro is down 57 at 115, and the yen is up 122 at 118.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do we have out here? If we start out with the futures, folks, what you're going to see is that the, let's see, we got, H5. Okay, future market out here, volatility, no doubt, it's a beautiful thing. We got it in spades. What did I just? Oops, 1 second. Sorry. Okay. Okay, so this is what you have here. S&Ps right now, we're at 1218.50. And what you have here, folks, okay, is this. Friday, what we did is this. You went to a lower low. We got to a price point of 1970.25 on the future. The swing point from the 16th is 1961.50. So bottom line is that you did not get to the lows. You had an expansion with volume, rejected the low with volume. What does that do? Well, guess what? What we have out here today, you can have a higher bar with lighter volume. You're going into the downdraft that is created out there on the 7th as well as the 13th. What does that set up? If we take a look at the SPY, what you're going to see, you're building cause to get into these lower prices. The SPY out here right now, what we've done thus far on this bounce, and all day long, by the way, even when we were down, the market had gone to a higher high. The SPY right now is doing 100 million shares. That is an absolute joke because guess what? The SPY is going against 214 million shares. That is building cause for lower price. How do you know? Because you went to a lower low. You pushed into that swing low. You had the volume. Your confirmation is out here today as you're getting higher with lighter volume. We take a look at the 3 Qs. Let me just see this here. Inside the 3 Qs, what we have is this. 3 Qs out here. Sorry about that, folks. 3 Qs out here are trading out today at 101.77. And how are we doing it? We're doing it the exact same way, meaning that you have the bounce going. The bounce is with lighter volume. Thus far, what we've had out here today inside the 3 Qs, you're bouncing up with 25 million shares as we had gone downtown with 56 million shares. Big numbers. Gold contract. What you have with gold, folks, is that gold broke topside once again. Wide price spread, accelerated volume, all of the above. Gold's trading at $1293.70 right now. What you're going to see with the gold market's going to be up at this $1323 in a heartbeat. This is a straight line move, and that straight line move, basically, the first move we had off the bottom was 1132. That was the low that was established on November 7th. Went from 1132 up to 1239. Bottom line, you're going up into that level. And what you do have, if you look at the XAU and the HUI, they have broken topside. Their ABC structures took out the B point, took it out with volume, all of the above. Nice setups out here. The XAU is at 81 right now. That's going to be running all the way up to the 97 price point. We take a look at the HUI. What happens with the HUI? Also broke the B point, broke it with volume, all of the above. Inside the indices, what we finally got out here is that you finally got silver moving. SIH5. Silver stopped moving on Friday. It moved with acceleration. Even better today. Now, you didn't have the price as much as today. Friday, we went from 1680 to 1786. Monster volume, though. Guess what? Higher volume today. This baby is basically ready to launch and get into this $20 area. So it's a big number out there when we're looking at the silver market. The volume characteristic out here, what we have with the volume out here today is this. And you can expect, folks, on a continual basis that we're going to have high volatility in this marketplace. You got the European Central Bank that start meeting today. The announcement is going to be coming out on the 22nd. And what that's all about, is there going to be a QE or is there not going to be a QE? Well, it was floated out here a little bit earlier today. Once again, was Draghi continues to say that he walks with no stick. He keeps yapping that he's going to do it. Bottom line, he hasn't done it. There was a floater out here this morning. What the floater was out here this morning, well, maybe they'll do something a little bit different. We'll see where this thing shakes out. Bottom line is that you're going to have a higher bar out here today. It's going to be lighter volume. That is a beautiful thing if you're a bear. Let's go to John in Philly. Hey, John, what's going on?
Hey, Tommy, thanks for taking the call. Tommy, I have to pay a compliment on your timing the trade price and volume. A beautiful opportunity set up early this morning on the S&P futures. Of course, yesterday the futures were higher with a no cash trade, and this morning the same. It opened up at like 9:30, about 2023. And that was right into the high volume downdraft bars from last Tuesday, I think it was, and offered a real nice intraday short. So it came down, was able to cover shorts. Now we're bubbling back up. My question, with the ESs up near 2020, 2018 to be exact, we're coming back up into those downdraft bars from Wednesday. Can you share with us what this action tells you, on the very short term?
What you have, as John just said, folks, you're at 2017 right now. Now, the bottom of the bar that was accelerating down in a huge way on the 20th, this morning, okay, for flat out this morning, you had 106,000 contracts. Big numbers, okay? We're coming back up. The last bar had 26,000 contracts. We're going to have less right now. You're at 2017. I'd sell the heck out of this thing at 2013, and no, 2023. So you're right. The bottom line is you're really right there. This is coming into ice, and that's the sell. So you're really only 5 points away from the sell. What you could actually do, folks, if you are a futures trader, you could scale into it. That's how I'd actually do it, John. I know you like trading the futures. I would scale into it. If you're going to do 3 contracts, 4 contracts, you go 1, 1, 1, 2, 2, 2, whatever that is. You know what I mean? Because this is it right here. Because what you also have is that you have your downdraft, folks, goes like this. And I expect as you come into the close, you're going to get a slight sell-off. And it's not going to be big. The future can be at, we're 2017, you can get to 2011 or something.
Can you pull that 10-minute bar chart that you're showing in the Tiger's Den? By the way, that's fabulous. Back, including the sell-off from last Wednesday. There was that big reversal down, high volume selling. Can you expand your chart?
Yeah, I think I can. 1 second. Let me see this.
Could you share with us what your view is as we just bubble up?
Okay,
right here?
Tell me which one now. I got it. I contracted it. The
selling was the day Wednesday, January 14th, where we fell from 2050 all the way down.
Oh, I see it. Okay. You just stay there. We're coming right back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now are up 15. Nasdaq's up 26. S&Ps are up 4.5. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Dow Industrials right now up 21. Nasdaq's up 29. S&Ps are up 4. Let's go to John in Winchester. Hey, John, what's going on? We missed John. Okay, so let's go back to this market for a second. We were talking from John from Philly, and he was talking about intraday, first off, where this market is. And if we take a look at it, what you have here is this. You have let me bring this, put this on the 10-minute chart. And what you're going to see is that, and this is a typical bear market move, by the way, folks, okay? And what it is this. Specifically, you are going to bounce back and forth on a continual basis. The volatility is going to stay huge. And your verifications come down to the point about how are you coming into swing points and how do those sell-offs get done. We get 40 minutes left into the close right here. And if in fact you get what we were just talking about, meaning that you just came up to ICE, the top of ICE is the 2023. We had got to 2019.75 on the future. The correlation inside the out of time in the trade goes like this. So we got what should have happened on the way up on the bounce. What we also have is that we have a high volume low from this morning at 1997. Now, the correlation goes like this. And this works on a daily, weekly, I happen to use 10-minute charts intraday. So what you're going to be looking for on a 10-minute chart intraday to basically say, okay, we're along the same path, is an expansion of volume as you start heading lower again. So we'll see how that shakes out. We get John from Winchester back. Hey, John, what's going on, man? Well, we did have him back.
Yeah, I'm here.
What's happening, brother? How you doing, man?
Hey, it's double digits, 40 degrees out.
That's it. You know what? We can always tell in Florida because it's summer here today. And so when it's summer in Florida, folks, okay, the Northeast, thank God, is just beautiful. Bottom line is that, yeah, we're like 75, 78 right now. So that's good. I'm glad that's warm up there for you, man.
Finally, but, yeah, I'm kind of in a short position with SWKS, and I know we're kind of in a bear market, but, I mean, where should I got in at around 73, so where do you think, should I put a stop on top, or?
You should, okay, so SWKS, we take a look at this, folks. This is what you have. Oops, sorry. It's trading out at 75.80. This is Wireless Semiconductor Company. What you've done, if this thing, I would close this out today. If this doesn't back down into this 74.97, it would have to come back almost a buck. Because you're over the high. And you're over the high, and it stays over the high and go a lot higher, man. I wouldn't give it any breathing room at all. There's no reason to. It's better off being down $2 than basically getting a gap higher. Let me just see when the numbers come out.
Thursday.
So the numbers come out Thursday. Yeah. Do not let this get away from you, man. Do not. Right now you're at 75.80, and your swing point. You've done 3 million shares. It took out 2.5 million, 3.7. Yeah, don't let this. Yeah, I'd close this out today, man. If this closes under 74.97, that's fine. But don't mess with it, John, at all. Period. At all.
Okay.
Okay, man.
All right, thanks.
Have a great one, man. Have a safe one. If we go over to the financials, folks, and the XLF, what you're going to see in the XLF is building huge cause to get into this price point down here of 21.64, actually 21.55. What we have out here today is that you're at 23.43. The XLF got to a lower low on Friday, did it with volume, big time too. We had 72 million shares down there. So the XLF is showing that it wants lower price. Morgan Stanley came out with numbers out here today. Their bond numbers just didn't add up. Well, they added up, but bottom line, not how they wanted them to add up. That is trading out there at 34.63 out here. That also came down on Friday with volume. That's heading down to this price point of 31.35. So you get a big number inside that whole financial sector. The XLE, the energy sector, what we have with the energy sector got a bounce on Friday. Last Wednesday, you broke the swing low, and you had some juice behind it. It wasn't higher volume, but yet it was still quite a bit. That is saying that it's going to be back down at those levels. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Doing great, Tom. How about yourself?
Great, man. Thanks for calling. Thanks for holding. Appreciate it.
I was calling about the SLV. I have, for both my sons, I bought a while ago the February $17 calls.
That's a beautiful thing.
I have, so for each one of them, I have 40 contracts each. And their cost is, I bought them, they were 25 cents a piece. So
Okay.
I have, I'm just trying to decide here if I should maybe, I know what you're kind of thinking as far as where I could potentially go to. I'm just wondering if it wouldn't be prudent to maybe take a little bit off the table here, or what are your thoughts?
Okay, so let's take a look at it. So the SLV, folks, I'm going to put this on this is the iShares Silver Trust. This also not only came alive, but what it's done is it's taken its swing point out with volume. And the swing points we're talking about are the December and October swing points. What I would do is this. I would hold it a bit longer, okay? And you're going to, well, first off, hold it. How many, you have 40 contracts. Okay, what you can do is this. So how much are they trading at right now? They're
around 80 cents.
80. So you get 40, 25. Yeah, you could get your principal back right now. There's one way of doing is just get your principal back right now, right? And let everything else ride. But I can tell you where I think these are going like ASAP. You get about another 86 cents in these in a heartbeat, I think. You know, probably more than that. Because it blew everything away with volume. And it did it right across the XAU, HUI, GLD, silver contract, gold contract, all of the above. And there's still plenty of people that are not bullish in gold or silver, even people that actually are bulls, supposedly. So that's a good scene. Do you know what I mean? And our bond brain in the den, thanks, Mark, okay, this is perfect. Selling about 12 of the 40, so you get us 25. Yeah, that's a great way of doing it, right? If you sell 12 of them, you're going to get your whole principal back. Then you run with the rest of them in.
Yeah, that's generally what I do. That way you're free in the trade.
Yeah, no, do it. Do it, man. Do it.
Okay.
That's even better. Then, because what happens when you do that, too, also, folks, thanks, Mark, appreciate it, man. What happens is that you will stay in it longer, and if, in fact, what happens with gold and silver, folks, gold and silver like to run farther and faster up and down, and we're on the up right now. So that way you can probably stay in it longer, and as our man Andy Heck says, you're going to be playing with the house's money, and that's going to get your two sons a little bit closer to those Harvard or MIT tuitions, man.
All right, thank you, Tom. Take care. Huh?
Have a great one, man. Have a safe one. You stay right there, folks. We're going to be coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow Industrials right now are down 3, Nasdaq's up 20, S&Ps are up 2.5, and as we come into the next 35 minutes, what you're going to see out here, I expect the volatility is going to be there, number one. If we go back to those S&Ps that we were bisecting and dissecting on a 10-minute chart, what you're going to see out here is that as it got up to ice, bottom line, you had the light of all, and we hit the top of that ice out there with 19,000 contracts. Thus far, we've already done 20,000 contracts, and we have, let's see what happens here. Where is that? Yeah, you get 5 more minutes. So what you have there is when we were talking about where the confirmation would come in that is the dead cat, number one, is that you need an expansion of volume as you go back downtown. And that's what we're getting right now. In fact, we're getting, well, not a huge expansion, but we're getting double the amount as we go down. So now we'll see how it handles these next few bars coming in. The way this is set up right now is that this can get into the 2010 area real quickly. I'll bring over the SPY, so if you do trade equities, you can see how this works inside the equity market. The SPY, number one, was coming into 88, is it 88,000? Let's see. The correlation that we're looking at here, by the way, is is how we came down this morning versus what the bounce is all about. Because what we've had thus far is that, okay, so we came down this morning. The first buy, you came down with at 8.8 million. That's what it was. We tested that with 2.6 million, and now we've already done 2.3 on the way down on the SPY. So the SPY itself is also doing the same thing. The first 10-minute bar was 8.8 on the way down. At 15 minutes ago, we tested with 2.6 on the way up. Thus far, we've already done 2.4 on the way down. So that sets up about, we got 3 minutes left. That sets up basically a pretty large bar on the way down. If we go to the 3 Qs, because what you do want to do is that you want to set up all the indices as you're doing that. And coming into the close out here today, what we are going to have, and this is where there's going to be some action, is that Netflix is coming out with numbers, and IBM. IBM, of course, is the big hound dog inside the Dow Industrials. We take a look at the 3 Qs. The 3 Qs had hit a high out here at 7.2 million shares. That's after coming down with 23 million. The 3 Qs, however, would have to get back inside 101.65 because it got over that level. Right now, it's only over that level by 2 pennies, but 2 pennies make a difference, folks. If it stays over that level, bottom line, you can get higher. Right now, I suspect we're going to get underneath that level, but that's what you have right now. The IWM just doesn't have any juice. That came down with 1.6 million shares. You went up and tested with 610,000. Yeah, 610,000. So that's pretty intense. You just came off that level. We've already done 403,000. So the way that is also set up, that's set up that we will get to a low and an expansion of volume simultaneously as we come down into that low. Bonds continue higher, and it's just absolutely amazing. There's no doubt about it. If we go over and we take a look at this bond market, what you're going to have with the 30-year right now has traded. We're at 149.27. Let's put this on a daily. 149.29 rather. It can't be 47. There's only 32 points in a 32 ticks in a point. What you have here with these 30 years, folks, they not only want to go higher, they want to go dramatically higher. Oh, King Dollar. Let's go look at King Dollar. So King Dollar, folks, okay, got to a higher high last week. And as we got into that higher high, it had some juice behind the move. The real question is it going to be able to stay over this area? And the number I'd be looking at is 92.76. That's what I'm looking at. So we'll see how that does shake out. That is on the daily basis. If you go and we take a look, there's divergence out here, and there's always bulls and bears, no doubt, as to the number, as to where everything is going. If we take a look at the UUP, now the UUP, folks, is the ETF structure for the dollar. And inside of that correlation, we had very light volume. It's been a huge expansion, number one. You went from $21 up to $25.50, and this moves very, very slowly. Then what we did have, though, on Friday, you had volume come in. My take out here still is that King Dollar is topping out, and we'll see how this whole thing shakes out. Because the correlation inside of this is, Andy and I were talking on the air, and in fact, our man Andy Heck will be on, next hour. And the correlation for me is that gold, silver's priced in dollars. Something's going to fly out here. The dollar wants to pull back because technically what we've had is that we're into that high and we actually have lighter volume on the weekly, monthly. And I understand the correlation, meaning that the dollar can move higher, gold can move higher, and what is that all about? That's all about that those are the two currencies, flat out, that everyone wants to buy so they don't get taken to the cleaners. So we'll see where that whole thing does shake out. What you do have in a huge way, not only just in the Middle East, of course, in Europe, we have high volatility. Now what you have geopolitically, and if you haven't heard this yet, this is about, depending on how old you are and what you've seen in Argentina, is that this deal down in Argentina, there was a prosecutor that turned around and was saying that the president was covering up a 1994 bombing of a whole Jewish community center in Buenos Aires that killed 85 people. Bottom line, that happened on Thursday. Bottom line, Friday, he's dead. As that came out over the weekend, what was happening is that the president was saying, yeah, you know, and they were coming out saying that he blew himself away. Well, bottom line is that now this is just coming across the tape. Forensics tests and government statements are adding to confusion swirling around the death of Argentina prosecutor who is investigating Christine Fernandez. That, in fact, there's no forensic evidence whatsoever that there's traces of gunpowder on his hands. If you remember Argentina years ago, folks, bottom line is that they did a lot of the citizens in on a continual basis. Now, does that matter in the markets? Yeah, it does matter in the markets, folks. Why? More turmoil in the marketplace, whether it's geopolitical and currency-wise. So you remember the deal with Argentina, one of the deals with Argentina, has to do with one of our large funds basically on the default deal. This, to me, would have to do with the people in Argentina. We'll see whether they basically take this down the road, meaning go into the streets and say, okay, listen, is our government basically doing people in so they can stay in power? It's going to be wild watching this whole thing shake out. Dow Industrials up 15 right now. The Nasdaq's up 26. S&Ps are up 4.5. And bottom line, gold, silver. We take a look at that silver contract. Silver is at 18.01. And what we have had out here, folks, is silver is finally on the move. Inside the futures market, gold is up 1.3%. Silver is up 1.3%. That's one of the best moves we've seen. Friday, they did rock and roll topside with volume. What you have out here, which I really like, is that you have follow through out here today inside the silver market. Because what we haven't had is that type of follow through. Well, we haven't had the wide price spread in silver. What silver's managers do today is that it's up and over the October swing highs. Guess what? Once you get up and over the October swing highs, it's going to be really easy to get up to the August swing highs. And the August swing highs in silver is dramatically higher. You're talking about a $21 number, and coming off a $17, $18 number, that's still $3. And that's coming off the lows that were $15. So when you take a look at 15 versus 21, that is one big number. If we go over to IBM, we take a look at IBM, Big Blue. What you have with Big Blue is this. Big Blue is building cars for lower price. It's off a high of 210. You're at 156. It's flat out here today. We're going to know real quick because coming into the close out here, Big Blue is going to basically come out with numbers. We'll see what those numbers are. We'll see what type of buying and or selling that gets done. If we take a look at Big Blue, and I put this back on a monthly basis, what you're going to see out here is what's sticking out like a sore thumb to me is 116. It's pretty intense. You're off that high. You came down on volume. Last time they come out with numbers was monster on the way down. We went from 190 to 161. You've been building cars here for 3 months. So the way that's set up is that, hey, 116 is game, And if 116, if in fact, we start moving down to that area, get out of the way, because what you're going to see is that Big Blue is a very large portion and part and weighting structure of the Dow Industrials. Dow Industrials right now are up 15, Nasdaq up 26, S&Ps are up 4.5. And to add to volatility, guess what? We got the State of the Union address tonight. So the Republicans, the Democrats, the president, they're all going to be out there pushing their deal. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. You get the Dow flat. Nasdaq's up 22. S&Ps are up 3. And coming into this close with these numbers, we'll see where these shakes and bakes. You have Cree that's going to be coming out with numbers after the close. IBM and Netflix. That is after the close tonight. Before the bell tomorrow morning, we have United Health, eBay, SanDisk. SanDisk has already been smoked. Sallie Mae, United Rentals, Xilinx. After the close, before the bell on Thursday, we have Alaskan Air coming out, Johnson Controls, Travelzoo, United Airlines. Then after the bell, Altera, Capital One, Intuitive Surgical. Now, there's a highly volatile stock, no doubt. Skyworks, Starbucks. Okay, so there's some big action this week. We're going to round out the week, finish off the week with GE and McDonald's. And GE and McDonald's, they are both dogs within the Dow Industrials. We go back to IBM for a second. We take a look at Big Blue, how Big Blue is trading out here. We'll put this coming into the close. What we have with Big Blue is this, folks, okay? This, technically, bottom line, wants dramatically lower price. Fundamentally, the whole world knows that, they've been able to manage their earnings for quite a while. Big Blue right now is trading at 156.93, and it's not a bad setup. That's on the daily. What you have, however, is that as soon as she gapped away, and she gapped away in a dramatic fashion from 182 down to 166, then took the next leg down to 151. She has some big juice down there, so we'll see exactly how that plays out with these numbers this afternoon, but I'm expecting that you are going to see some high volatility, and I'm also expecting lower prices. And when you do look at the Big Blue right now, it doesn't look that bad actually on a daily basis, because the stock has just gone from the price point of 210 to 157. That in itself is a monster, folks, because it's huge. But what you have, and this is crucial to wrap your head around, is this. The last time it had any volume is at that 116 level. When you come down, well, no, first off, when you go up, and the last time we had any volume is at the 116 level. Once you break lower, which IBM has done, and it has volume off the high, you can expect that you're going to basically come back to the last time that had volume. So that's where this whole thing is shaking out with Big Blue. So it's a big number that I expect we will see on the way down. And, one of the tigers just in the den brought up a great point. We'll see what IBM says about the dollar, the strength inside the dollar. There's no doubt that the strength inside the dollar for large multinational corporations is going to be a big number. So we'll see where that certainly does straighten out. The dollar index itself, okay, that little baby is hanging at these highs up here. Right now we're at up 432 ticks at 93.32. The euro is at 115. And what we will see the next couple days, well, picture this. So the first part of the meeting is over in Europe out here today. You're going to have a meeting tomorrow. Whether Draghi is going to basically come out and basically start buying bonds inside the European Union will be announced on Tuesday. Thus far, what we have had on a continual basis is the Draghi basically talking and not acting, So we'll see where this whole thing does shake out. Our man Andy Hecht, he brought up a great point, and Andy's going to be on the next segment in next hour, folks. Okay, and what he was bringing up, it was the Swiss National Bank that turned around and said we'll get rid of the peg versus the Swiss National Bank. And if you remember, what Andy was bringing up inside the den is that he was saying, if you remember, just about a month and a half ago, the Swiss were voting on whether they had to keep their currency, and the Swiss National Bank would have to hold more gold in correlation with that. And Andy was speculating that, bottom line, they might have, I think that the Swiss National Bank president did a deal on a referendum, vote against it, and I'll send Europe packing. And you know what? I think that's a great observation, because bottom line is that it happens, number one, and this is all about survival, folks. This is about survival in an incredible way. Why? Because Europe is toast. And, we'll see how that shakes out on a longer-term basis. But what we have out here is that the European Union, right now they're going after the Swiss, because the Danish. The Danes basically are also pegging their currency to the euro. They're claiming that it's not the same deal. It's going to be the same deal, folks, because the Danish right now, if you put the money in the bank there, you get minus 0.2%. Currency traders are going to go after every other currency to get it unpegged away from the euro. And then we'll see how this euro shakes out. What is intriguing out here for me right now is this. So picture that you have the gold contract that's dramatically higher. You have the silver contract that's higher. We have the dollar that's higher. If, in fact, Draghi comes out and is going to buy a huge amount of bonds, realistically what it should do is basically hammer the euro again. And it's like, okay, so is there something else that's going to simultaneously take place inside the U.S. Central Bank? And is that announcement going to be simultaneously? Because you got to remember something. You have a financial component to all of this, but what do you have also? You have a geopolitical component to it. The reason that, and we have a geopolitical component to it inside the context that there's so much unrest right now in Europe, because they're worrying about terrorism versus what their money's worth. But guess what? Both go hand in hand, because what you are going to have, and what you do have, is that more social unrest equals what? Equals more volatility, equals lower price. That's the way this whole thing is shaking out. I heard a few analysts out there today saying that, well, the United States is the best, and there's no doubt about that, folks, okay? But guess what? This is a one-world trading market now, meaning just not trading stocks and bonds and currencies and silver and gold and commodities. If someone else is losing a fortune, our companies and our hedge funds are also betting on that. If they're losing, guess what? It comes home to rest. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials right now flat. You get the NASDAQ up 20. S&Ps are up 2.5. You get gold up 17.30. Silver up 23 cents. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night and a great week. Market-wise, let's take a look at it out here. We had the Dow up 3, NASDAQ up 20, S&P's up 3.5. Gold contract up $18, trading at $1,293 an ounce. Silver up 20 cents at $17.95 an ounce. Platinum up $17 at $1,283 an ounce. Copper down 2.5 pennies at $2.58 a pound. Light sweet crude down $2.30 at $46.39. Oil, folks, bottom line is building the cause to get into that 32 level. Pretty wild. Bonds, what you have is this. The 10-year up 1 tick, 129.28. 30-year up 17 ticks at 150.02. Bottom line, both of the bonds refuse lower price, have the juice to get a lot higher. King dollar up 410 ticks, trading out at 93.30. You got the euro down 49 at 115.57, and the yen at up 116, trading out at 118.72. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll start out, folks. We take a look at first the futures. So what do we have out here? You have a market last week. We get into low. You do it with volume. S&P, the futures right now are 2017. Bottom line, the S&P futures, folks, are building cause to get down into this swing point from the 16th of December. I suspect not only that it's going to break that swing point, it's been building cause, it does want to get down into the 1805 area. If we take a look at the SPY, and you want to see that correlation inside the SPY, volume-wise, we did out here on this bounce out here today, folks. You did 846 million versus 975 in the market, in the Dow Industrials. If we take a look at the SPY, what you're going to see inside the SPY is this. The SPY out here did 127 million shares out here today. That 127 million is going into 214 million. So you can see that correlation is pretty intense. The NDX 100, we take a look at the 3 Qs. What do you have with the 3 Qs? With the 3 Qs, you got to a higher high out here than Friday. We are at 101.62. That is also a building cause to get into not only the December swing point of 99.96. I expect you're also going to see this down at the 90.24. Netflix, NFLX, we just had Netflix come out with numbers. And if we take a look at the numbers on Netflix, this is what you have in that. Sorry about this, folks. There we go. Okay, so Netflix closed at 348. Netflix right now is trading at 392. That 392, where is that going into? Well, guess what? You have a gap. When it gapped down, that gap down, and that's gonna, the top of that gap is 395. So what you're up into that gap. That's where we had gap down. Huge volume on the way down. We'll see how that straightens out on the way back up. It looks to me like that bounce, however, and we'll put this on so you can see this expansion. What it looks to me that is all that's going to do is fill that gap. That's how that's shaking out. Big Blue just come out with numbers. Big Blue closed out here, and Big Blue is dead meat. It's been up and down and all over the place. Big Blue had closed at 156.95. That is trading right now at 155.90. It had shot up to the 159 area. Numbers on Big Blue go like this. The estimate was 541. They took in 581. So you had earnings per share that did go up. Revenue, their fourth quarter revenue is 11.1 billion shares. Bottom line is that they made their numbers. That's how it looks. But they missed their revenue. So when you miss the revenue, okay, Bottom line, when you miss revenue, folks, the market itself knows that you can do financial engineering on a continual basis. There's no doubt about that. That's what IBM has done. You're going to see IBM selling off. Gold contract. What do we have with gold out here today? What you have with gold is this. Wide price spread, accelerated volume. Taking swing points out and taking them out with volume. Gold right now is trading out at 1293. GC. 1293 flat. Bottom line is that you had the juice inside this move out here on Friday as well as today. Friday we did 288,000 contracts. Today we did 219,000 contracts. Gold contract is trading at 1293. That's on its way to 1319. We go take a look at the silver contract. Silver finally had some movement, folks. It had wide price spread, accelerated volume on Friday. It continued throughout here today. Silver had nice volume, which we needed. Silver did 66,000 contracts, taking out those swing points, going all the way back to the October swing points. Now what you're going to see with silver, silver's going to be going after those December swing, those November, August swing points. Big number, though. There's no two ways about that. King dollar. What do we have with King dollar? King dollar is up 430 ticks out here today. Bottom line, you stayed at a higher price. We'll see where this whole thing does shake out, specifically meaning that you had the Fed, the European Central Bank, that start meeting today. You're going to have an announcement on the 22nd, and on the 22nd, the announcement's going to be, is Draghi going to be buying bonds and do a quick QE in London? We'll see if, in fact, that's how this thing's going to shake out. Some of the high-volume stocks you had out here today, you had Advanced Micro down 15 cents. Apple was up 2.79. We had Facebook up $1.04. Delta was up by 3.33. Johnson & Johnson's getting whacked. That was down 2.75. Inside the Dow, the big one inside the Dow, of course, tomorrow is going to be a big blue, if it can make it or break it. Inside the Dow out here today, Johnson & Johnson was the big mover on the way down, taken away from the Dow Industrials. We take a look at, it was Johnson & Johnson, Intel, Goldman Sachs, and Home Depot. Putting juice into the Dow Industrials today, even though it was flat, it was Coca-Cola, American Express, Costco, and Chevron. Inside that context, if we go over and we take a look at the financials in general, the financials in general, folks, want lower price. We go look at Goldman Sachs out here. Goldman Sachs come out with numbers on Friday, and what you're going to see with Goldman Sachs is this. Goldman Sachs just come off a high of 195. You're at 175. Pretty intense, no doubt. Where are we going? October 15th swing low. This October 15th swing low, no matter where you go inside the marketplace, folks, is out there. It's going to get tested. Many of the equities inside these indices have already come down and have broken that lower level. That's a huge heads up in the context of where this market wants to go. And if we do go over and we take a look at the SPY, you're going to see that we're way off that level. The SPY right now is trading at 202.60. The low of that number, folks, is 181. So you're talking about 22 points on the way down. The XAU, the HUI, they went topside Friday with volume, took out their swing points, their ABC structures on the way up, and they're very large ABC structures on the way up, by the way. Straight line moves, too. And what you can see the strength inside the XAU and the HUI. When you do an ABC structure on the way up or the way down, folks, most of the time, so A to B equals C to D. The A to B is a straight line move. The B to C is normally a chopping move. And the retracement on the B to C, on an ABC on the structure on the way up, will tell you, will give you a good probability of how strong the structure is. If you do a small retracement and then you take out the B point with volume, that is a strong move. Well, inside the XAU and the HUI, folks, that's exactly what it did. It actually went to a higher high on the 13th, both of them. They pulled back on the 14th, and then it said, see ya, don't want to be ya, and took off topside again. It's the first part. Second part is just as important, and what it is this. The congestion that we were in, the XAU and the HUI, has been since October of 2014. That built itself a nice bottom, has caused when we went straight down from 102 down to 76 in the XAU. Guess what? It's going to go straight up. There's nothing stopping that baby because there was no consolidation on the way down. Straight line move. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow finished down 3. NASDAQ off 20. S&P's off 3.5. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You had the Dow Industrials finish up 3, NASDAQ up 20, S&P's up 3. Now, as we do each and every Tuesday at 20 past the second hour, we're going to go to our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, right here at TFNN, Andy has an outstanding show, 5 to 6 Eastern Standard Time. You can get all the programming at TFNN. We do live programming every trading day. We start at 8 a.m., we go to 6 p.m., and we replay that programming, folks, right on your cell phone. So if you go to tfnn.mobi, you will be able to get the audio. If you'd like to get the video with the Tiger TV, charts, audio, video, all of the above, just go to tfnn.com, hit the TV on the top right-hand corner. Don't forget, Andy also has an outstanding newsletter. It's the Technomental Commodity Report. The way you can test drive it, go to TFNN, go to newsletters, go to trading newsletters. Andy Heck, what's going on?
How you doing, Tom? Well, today you have me on Skype, but we're having a little technical difficulty, so you have me on Skype and on the phone.
That's a beautiful thing, man.
We'll figure it out after. All right, before we start talking about commodities, I got to ask you one question.
Yeah, Patriots.
Are your Patriots cheating again?
Are they cheating? Are we cheating again? Oh, my God, that's so funny. Oh, with Bill Belichick. Now I know. Oh, my God.
Oh, that's have you seen this thing, the deflated ball scandal?
No.
Oh, they say that because it was raining in Foxborough on Sunday's game.
Okay.
They took some air out of some of the balls that they gave to Brady so he could grip it better, and now the NFL is looking into it.
Are you kidding? Oh my God!
I'm serious. I thought you knew about that.
Oh, that's wild, man.
That's so funny.
That's intense, man. Oh,
it's intense. I saw some lawyer on TV last night saying that, hey, they might send the Indianapolis to the Super Bowl if the NFL really wants to get hard on it.
Oh, he's a warrior, man. That is going to be absolutely amazing if that in fact happened.
Oh my God,
folks,
that's so funny though.
And it totally
makes it interesting, makes life interesting.
It totally makes sense. I mean, if you've ever felt, football folks, okay, they're hard as a rock, man. And in the rain,
exactly. When it's raining, they're slippery.
It's wicked, man. Oh,
yeah.
That's crazy.
It should be interesting. Anyway, let's talk about commodities and the dollar and the Swiss and so much going on, huh?
There's no doubt. It's huge. Oh. Hey, how about in Argentina? That's really intense, man.
Oh, that's a murder mystery.
That's Wipeout City.
I don't think it's too much of a mystery, though.
It's not too much of a mystery, I know. It's so weird, though.
Someone gets whacked before they're going to go testify.
Right.
It's not too hard to put two and two together.
Pretty intense, man. Unreal.
It's pretty intense. The world is an intense place. But, Tom, you said something in the first segment that I totally agree with, and I want to go back to it for a minute.
Yes.
This market is a trading market. This is not a market for investors.
Right. Yeah,
we're going to see a lot of volatility in 2015. My God, we're seeing it already. Gold was down 4.4% in 2014. We're already up over 8% this year.
Right. No, this has been a straight line move. There's no doubt about that. And, folks, what you have here is that our man, Mr. Dave White, he was saying to me in the den, he says, you haven't heard anywhere that China was down 8.5% on Monday, folks. 8.5%.
Right.
That's intense.
It closed down 7.7, but it was down about 8.5% at the worst of the day. And the Chinese, look, the Chinese grew at 7.4% last year. That's the lowest growth since 1990.
Yeah, it's indicative of what you have happening and what you can expect in the future. Because if you remember, and I'm not expecting, by the way, a 2007 meltdown either, folks, okay? I am expecting a huge pullback. But what did happen, for all the tigers that are in the den, they know that we were basically hitting the Chinese market first. The Chinese market was the first one that fell apart first, even then. It doesn't mean that that's the case. But these are heads-ups when you get a market that's down 7 or 8%. That's insane.
Absolutely.
That's like us being off 1,500 points in the Dow.
Exactly. I agree with you that it's different than 2008. First of all, you got to remember, forget about the Chinese government stimulating the economy there. Oil prices are stimulating their economy. All raw material prices are dropping through the floor. So, this is this is a big stimulus for China. So, this will help. It will not hurt.
Yeah, no. There's no doubt. There's no doubt. What's going to be intriguing here, you can see oil got hit again today, and is it going to fall through that bottom?
Yeah, I mean, it looks very likely. It definitely does. I mean, it also looks like copper is going to, continue lower. I don't like the action in that market at all. We broke through the long-term support at 272 last week.
Right.
We haven't even gone back up there to test that level.
No, I agree. I mean, if you look at SCCO, that is one of the largest copper stocks out there. That is a high volume low. And you know what's interesting, Andy, and this is something we can watch. The SCCO, folks, is high volume low, and it's going to be hard to break it if it comes back right away. So when something breaks down, if you go up, which you bounced 2 days on SCCO, if you go back right away, that's what you'd like to see for a buy, meaning because the energy's already out of the market. If this builds cause for a while, like IBM has been building cause, then you get a problem because then you'll see lower price. It's been building up some steam, you know.
And that's what I think is going to happen, Tom, because I'm putting a copper chart up here.
Yes.
And what we've seen all throughout 2014, really especially starting in kind of May, June, is that we saw lower lows and lower highs in copper. And we've seen, a number of spike downs and then recoveries, and it kind of sits and sits and sits. Looks like it might rebound and then makes a new low. And the low last week, which got down to like 242, it's looking like that again. We're back up. We're traded a little bit above 260. Now we're below 260. We sit a couple of weeks, and then, we make a lower low. That's what it feels like to me. And, that's what you're talking about in SCCO, which is kind of a proxy for copper. I mean, it's the pure copper play in the stocks. You can't look at FCX as a pure copper play because you got oil in there and you got gold in there, which makes it cloudy. But SCCO is kind of a pure copper play, and I think we're going to see that mirror what's going on in the copper market, which I do not like this action.
Yeah, I mean, bottom line says lower prices are coming at us, So.
Absolutely.
And
now, the dollar. Let's talk about the dollar.
Yeah, let's talk the dollar, man, because this thing really intrigues me. I mean, because
dollar, man.
Well, listen,
I'm telling you, Tom, I know I'm an outlier here. I believe that the dollar and the euro will trade at parity in 2015.
Right.
I think that the stars are lining up here.
You're not an outlier, number one, okay? That's the bottom line is that, King Dollar's been King Dollar for quite a while. What I can't wait to see how this reacts to whatever Draghi's going to end up doing on Thursday, because
I have to believe we got tipped off last week with the Swiss.
I believe that, and what I'm trying to figure out is this. So picture this, folks, okay? You had the Swiss, bottom line, do their own deal, which wrecked huge amounts of portfolios and banks, and you're just going to hear about them little by little by little, which we are, by the way, okay? If, in fact, that's what he does, and that euro gets smoked and it's quick, that is the quickest way that we can get a crash. And I'm just sitting there saying, you know what? Our Fed is not going to basically stand still prior to whatever they're going to do on Thursday. Yeah. Andy Heck, Tom O'Brien. You stay right there, Andy? Cool?
Sure.
Awesome, man. You stay right there, folks. And after the close out here, your good old Big Blue's getting smoked again. That's down $7 right now, trading at 153. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Heck. We're talking commodities. What you did have out here is that Netflix come out with numbers. Netflix is up big, folks. And Netflix, I wouldn't be buying it. What you have with Netflix is that it's going after the gap down. Netflix said the gap down at the $395 level. Netflix closed at $348. It's trading at $388. Big Blue, folks, is toast. Get the butter out, the whole ball of wax. Big Blue closed at 156. It's at 150 right now with juice. It's going to blow out this additional ABC structure on the way down. And what we've been talking about, which is pretty sick, but 116 is out there. That's the last time with the price and volume. So That is pretty intense. And, of course, that's going to put a jolt inside the Dow Industrials. And the Dow Industrials have certainly not broken on, lower yet with some juice. What we do have is that you had the announcement this morning that Google wanted to basically invest in SpaceX. Bottom line is that not only Google did it, but Fidelity did it. They put $1 billion into SpaceX, which basically now they're going to own 10% of it. We're talking with our man, Mr. Andy Heck, and we are talking commodities.
Well, before we go back to commodities, I guess Mr. Buffett got out of IBM in just the right time, huh?
Evidently, because what you do have out here is that this is pretty, you're going to see something, folks. IBM has come off its high with volume. Now what you're going to have is that you're breaking the 150-50 level, and you have juice down there, too. So
all of these markets are just lining up for incredible volatility this year, Tom.
They are. And
real, divergence, volatility. Let's go back to the Swiss thing last week.
Yes.
It feels so contrived to me now. I heard you made a comment about what I wrote in the den.
Well, I really like that. I mean, I
think
makes,
they did a deal.
Well, let's talk about it, because there's plenty of people that in their cars right now this hour. So talk to me about what you had said.
Yeah, I said, it's very interesting. Back in November, they had that referendum, remember?
Yes.
Backing the Swiss franc with gold.
Right.
And
with
Jordan
more
Thomas,
gold. They have to do like 10% now. They wanted the referendum was like 20% or something, right?
Right. Well, yeah. Huge. 1,500 tons of buying. No, they would repatriate all their gold holdings.
Right.
Anyway, the referendum failed, and Thomas Jordan, the president of the Swiss National Bank, was one of the big opponents of the referendum.
Yes.
And I just wonder whether he quietly said to the people who count, who get the votes there,
yes,
that, hey, I'll take care of this. I'm not going to let us get roasted with Europe here.
Right.
I've got another plan. And I think what we saw last week was that plan executed, which was basically removing the cap. And you know what? He didn't tell anyone, which was, as far as I'm concerned, a very smart move.
It was a smart move. It was.
Had he told everyone, they would have gotten out of their positions.
No,
and
totally.
It would have been ridiculous.
Right. And folks, the way that the Swiss moved on this one is exactly, and Andy could tell you better than I, because he was in those markets then, that's how they moved in the 80s and 90s, right?
That's right.
They're the monster. They're for a small country, they've always been the monster in the currency and commodity space, right?
I haven't seen a move like this in a currency since George Soros posted the British in '92.
No, I know. No. Listen, it reminded me right back there. If I remember anything, I was like, oh man, this is game on now, big time.
Oh yeah.
Yeah.
And what I think now is basically you got central banks going back to running their books in the interest of their nations, and it's going to appear like central banks are going rogue. Look, after 2008, there was a lot of coordination. At this point, they're stepping back from that coordination. I think Draghi's going to do what he's going to do. He's got the worst job of all because he's got like 19 countries to make happy there. And I don't know how he's going to do it. Whatever he does, it's not going to be enough for some, and it's going to be too much for others. And no one's going to be happy.
And what is here, folks, is that and on the table is the extremist terrorist situation in London. I mean, in Europe in general. That's what's really on the table here. Okay?
This is what's on the table, but this is not politically correct.
I understand, but that's the real table, man.
But this is what's going to drive it, and this is the problem. And you know what? The Europeans are going to care much less about the value of their euro currency than they are about their safety.
About living.
And they should care about that.
No, I agree. But that's the backdrop, folks, in a lot of this, too. Because you can't have an economy if people are worrying about getting blown away. First,
exactly. They're afraid to go out of the house.
Well, you know what? Many times I've talked to people, when they thought the gold bugs thought the United States was going to be falling apart, folks, right? I've done plenty of these gold shows. And unfortunately, what ends up happening is that people will think that you got to hoard gold, you got to do this, you got to do that. And I used to say to them, Andy, hey, go get an M16 if you think it's going to be over, because gold is not going to even matter if, in fact, Armageddon's coming. Because you're going to need it's a different ball game, folks. Okay?
Right. No, that's the right comment to that.
Right.
Certainly. But what's beautiful about gold is that it's rallying in every currency. This is the best situation for gold. You have fear, you have divergence, you have currency volatility picking up. Gold is reflecting an increase in in currency volatility, which is what we're going to see this year. So you had the Swiss do what they did last week, Tom.
Yes.
This week you're going to have Mario Draghi. All right, and he's definitely going to do some kind of quantitative easing, which I can't find a way to make a bullish case for the euro if they start buying foreign sovereign
I can't
debt.
Either. I agree. I can't either. Yeah.
And the cherry on top is the Fed did say that at some point in 2015, interest rates will go up. Short-term interest rates will go up. And if central banks are going rogue and doing what's right for each economies, each of those three things will happen, and that will make the yield of the U.S. dollar so attractive. Why wouldn't you buy it? Not only does it yield more, but it keeps going higher.
And so check this out, folks, okay? And what also happened this morning is this, is that, did you see that article? So in the front page of the Journal this morning, folks, okay? Even inside the context that, as Andy's saying, that, the European Central Bank is saying, hey, guess what? We're going to go QE. I suspect that article, there was an article on the front page on the right-hand side, folks, and I suspect that was just a leak that they were trying to push out there, our own Fed, like, hey, we're still going up. Because that was the article was about, that, hey, we're still going up. And I suspect what that is, though, Andy, is that they're testing that water there. You know what I mean?
Or preparing the markets. Listen, what we saw last week, why are people so angry at the Swiss? Because they got killed,
Yeah. Oh, great point. Great point. I see.
By the way, for the last time, since 2008, central banks have told everyone in advance what they plan to do.
Right.
They put this cap on. Every time the Euro Swiss went near 120, you just had to sell the Swiss. And guess who would bail you out of the position? The Swiss National Bank. They got tired of doing that. So FXCM needed a bailout on Friday. Citigroup lost $150 million. The other banks lost lots of money. A hedge fund lost $800 million, and we haven't even heard all the fallout yet. That's why they're mad.
Yeah,
because it's not being signaled. By the way, central banks should never signal. The element of surprise is their strongest tool.
Yeah, oh, there's no doubt. Because what happens there, folks, is that the leverage will stay lower. And
right. You see them taking the power back. By the way, in terms of leverage, FXCM were at the forefront of arguing with the regulators to go. The regulators wanted to say you had to put up 10 cents margin on each dollar for foreign exchange positions, and it was 2 cents margin. FXCM was on the forefront of keeping it at 2 cents. Had they listened to the regulators, they would not have had to be bailed out. Kind of ironic, isn't it?
Well, it's not only ironic. What I still can't figure out, I can figure it out, but it's amazing to me that there were that many positions inside the currency of the franc versus the euro, which is
it's a no-brainer. Every time it goes to 120, it's going to sell off.
I understand what you're saying. Right.
And by the way, there was no volatility. The volatility was like 4% or 5-6% on the Swiss franc. So the only way to make some decent money is to do it bigger.
And so what happens, what Andy's saying here, folks, and this is, even though that the Swiss franc in this small country, because the risk value that they thought was so low, they piled on, they continued on, and that's what you got. Yeah, interesting.
Yeah, and by the way, the bigger their positions went, the more billions it cost Jordan, the president of the Swiss National Bank, every time he went to the cap. And by the way, QE, it would have blown right through the cap. That's why he got out.
Oh, for sure, man. Yeah, they weren't going to get run over by a freight train.
They weren't hanging around for Armageddon. That's for sure.
Yeah.
They were very smart. And by the way, it does hurt Swiss manufacturing companies.
Oh, sure.
Swatch, companies like Swatch, Rolex, Nestle. This is not great for them. However, in the long run, it's a bitter pill to take, because it's the right pill. He did absolutely the right thing, and instead of being a villain, he will be remembered for this move as a hero for the Swiss.
No, I agree, because what happens is that, if you weren't in the market, folks, okay, and you had francs, guess what? You're 30% richer than in the euros.
That's right.
10 seconds. Unbelievable. Listen, man, we appreciate all the knowledge and the help, the education, and we look forward to showing 15 minutes.
See you soon, Tom.
Thanks, man.
Take care.
You stay right there, folks. The Dow finished up 3, NASDAQ up 20. Andy's going to be coming right back here at 5 o'clock. Going to be right back, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. And don't forget, coming right up after me, it was going to be our man, Mr. Andy Hecht. He's going to be growling and prowling with you. We were talking IBM. So IBM 2015 forecast trailed many analyst estimates as the chief executive officer, Ginny Romney, tries to return the company to growth as basically the service goes down, the hardware sales go down. Their operating earnings for 2015 are going to be $15.75 a share to $16.50 a share, which was just filed in a regulatory filing. Bottom line is that IBM, folks, okay, has for the last 6 years basically done a job of financial engineering on their equity. What is sticking out like a sore thumb is this. If I bring IBM up and you put this on a monthly basis, what you're going to see is this. You're going to see, number one, we made a high. The high that was generated in IBM was done in March of 2013. That was 210, 215 to be exact. Then guess what? We came off that high with volume. When we broke down in the last earnings call, that was the breakdown in October. You blew away everything with volume. You took out the swing point. We went from a price point of 190 to 161, monster volume. You did 162, that's actually 146 million, blowing away the swing points out there of 87 million. That sets up a run down into at least the highs of 2008, which is 116. You know, so technically that's what the setup is. What we'll see out here tomorrow morning is a run after the lower swing point that was established a couple weeks ago. What we have out here right now is that you've been trading at 153 to 150. And your swing point on this, we take a look at this swing point, what you're going to have is this. The swing point here is 150.550, and it's light volume, by the way, down there. So I suspect, number one, you're going to get down there more than like what you're going to probably see. You're going to see it actually get blown away. Let's go to Mike in Reno. Hey, Mike, what's going on?
How you doing, Tom?
I'm doing great, man. You having a good day out there?
I'm doing well. I wanted to get your opinion on Alaska Airlines long, ALK.
Let's take a look. You got Alaskan Airlines. The low is 36, the high is 64. Okay, so what do we have here? Okay, we put this on a daily, and it certainly has volume on the daily. You come off this low of 40 bucks. We had juice all the way up to this $58. You go sideways. You go top side again. Let me put this on a weekly for a second. We've had with the airlines is oh, this is a monster ABC up. Look at this. Interesting. Okay, so this is what you have. You put this on a weekly. Your 8 point on this was the week going back to 2013, June of 2013. The low there is 25.15. So 25.15's A. Your B is 50 bucks. So you get a ballpark at $25. Your C point is 40. So you get 65. Oh, interesting. Okay, so check this out. This is going to be dangerous, Mike. This is why. So watch this. When you finish an ABC structure, folks, on the way up or the way down, the equity likes to do something other than continue the same way. So that's on a weekly. Let me put this on a monthly, because where we are right now, Mike, is finishing an ABC structure on the way up on the weekly. Let me put this on a monthly. Let's see what we have in a monthly. Okay, so now, oh my God, we got an ABC on the monthly. Okay, cool. Okay, so let's watch this. Okay, so your ABC in the monthly is 25. It's the same one. I'd be careful, because what you have is this. You finished an ABC structure on the daily, on the weekly, and on the monthly. And this has actually gone nonstop from $16 to $64. So your risk goes up dramatically that when they do come out with numbers, which I know you know, which is on the 22nd before the market, is that on an ABC structure, folks, you can do a 1-to-1, a 1 to 0.382, you know, and you can go higher. There's no doubt about that. And that's one of the questions in the den, going even further. You know, why can't it go that? It can, but your risk versus your reward goes up dramatically, man. You know. So.
Alrighty.
Okay, brother. Have a great one, man. Have a safe one. If we go over to Netflix, NFLX, you know, Netflix out here, folks, bottom line, got juice underneath it at the close. And it was up $11. After the close out here, you're up an additional $50. And we take a look at Netflix. Now, what you're going to see in Netflix is this. Netflix is coming into the gap. Netflix had gap down from 450 down to 330 with volume. Then you got to a lower low, had lighter volume. No problem, right? Now what you're going to see, and don't buy Netflix, folks, because we're trading at 394. We're trading right at the last swing point. And I suspect what you're going to see out here is that it's going to get into it. And if it gets into it and stays into it, then you'll see Netflix move all the way up to the 433 area. And at the 433 area, that is where more than likely you could be selling Netflix again. SanDisk, SNDK. SanDisk is going to be coming out with numbers this week. SanDisk is an equity that absolutely got smoked, got toasted, got roasted, all of the above. That broke the October 15th swing low, did it with volume. That's coming out, tomorrow after the close. What you can expect out here is that you'll expect some kind of a short-term bounce. You've gone from 105 to 77. The volume wasn't, it was light today, it rejected lower price, so I can expect to see a bounce. That, folks, more than likely is going to be a very large ABC structure on the way down. Because when we take a look at SanDisk, what you also have is that SanDisk is at 78, and the next stop on SanDisk looks to me, well, actually, yeah, 70 is game, which is only $8 down, but then what it also game is $57. So that's a big number. Our man, Mr. Dave White, is helping me out in the den here. He's saying that it's 8 days for the cover on SanDisk, meaning to cover the short, because SanDisk has a 7.5% short position, 16.3 million shares a short the position. So what that does do, no doubt, is that gives an emphasis on the upward side if they can get it going just a bit. You don't have to get it going a lot, but you get it going just a bit, and that's going to make a difference. Now, in the morning, folks, okay, before the open, what you want to watch for is this. I'm specifically saying don't trade this, but I want to show you something that happens in the morning if you really want to understand how markets move. This doesn't happen all the time, but this will give you a really nice clue of what's going on. You look at the futures. Let's say the futures are up. Then you still see IBM down about $8, $7. That is a great opportunity to sell away in a big way. That is a fundamental disconnect in the marketplace. You stay right there, folks. The man, Mr. Andy Heck's going to be coming up, growling and prowling with you. Thanks for being here, folks. Look for you speaking here right here tomorrow. Go get him, folks.